What's up, everybody? John Jacoby here, San Antonio's top realtor. Wanted to talk to you guys about seller financing. This is a topic that's near and dear to my heart because we recently sold our home doing a wraparound mortgage or seller financing for the buyer. When we first listed the house, we were getting a ton of interest, lots of people coming through, a ton of interested parties, a lot of people saying that they were going to make us an offer, but in the end, we did not receive any offers. So we decided to open up the home to seller financing. By offering it as an owner carry for the note, we were able to open up the house to a larger pool of buyers and make it available to more people who may have the cash to put as a down payment but not have the credit to qualify with the bank. So that was the situation with the particular buyer that came to us wanting to buy our home, and it worked out just fine. So some of the advantages to going seller finance is one, you're able to open up to a larger pool of buyers. Two, you are able to earn a little bit of interest. You collect a down payment when you close, just like you would sell, and you collect monthly interest payments. So there's a residual benefit when you go seller finance. You don't just make the one big check when you close, but you also are going to accrue interest every single month off of the amount that you're financing for the buyer. And then the third advantage is versus renting the house, because we just thought about renting the house, is you don't have to make the repairs when you are owner financing the house. So technically you're the bank, so the bank's never going to go out to your house and go fix something for you. So three advantages going seller finance: more buyers; two, make some money every single month after you sell the house; and three, no repairs necessary. Just like if you were to rent the house, then you'd have to continue to make the repairs. Of course, there are some disadvantages for going seller finance. One main thing is what if the buyer stops making the payments? So that's something you have to be prepared for. Of course, in Texas, we're a non-judicial foreclosure state, so you're able to go through the foreclosure process and get the house back. As long as you are abiding by the steps of the process, you should be able to get the house back in about a month's time if you're really on with getting them out. So that's the main thing is you have the risk. Two, most mortgages are subject to a due on sale clause. So if for any reason, if your lender, the person that you're paying the note to, if they get a wild hair up their ass, then they may call your note due. But as long as you're continuing to make your monthly payments, then that shouldn't be an issue. The main thing, if you are going to sell your home seller finance, you want to make sure, one, that you have an attorney prepare all the docs, and two, you want to make sure that you are using a note collection service. That way, that the accounting and the bookkeeping is done properly, so that way you're not telling your buyer, hey, you made 20 payments when they really made 21 before they refinance. So one is have an attorney prep the docs. Two, make sure that you use a note collection service. And three, make sure if you're going to sell owner finance that you collect enough cash up front. You have to have enough cash from the buyer to pay all your fees, and then still have a little cushion in your bank account in case they decide to stop making the payments, or in case they decide to ruin something in the house, and then you get it back. So again, John Jacoby here. If you're interested in buying or selling a home, seller finance may be an option for you. Give me a call and we can discuss some different creative ways to help you get your home sold. Easy to get a hold of. You can call me here. It's 210-857-6942. And if you're just tuning in for the first time, please like and subscribe to my page. Would love to keep connected and continue to share some great content about different creative ways you can do a real estate deal.